That is Alvin from Dr. Wealth. Keppel DC REIT has a new announcement and they are going to buy 2 data centers from their sponsor Keppel Corp. And these 2 data centers are located at Genting Lane, and that is the number 7 and number 8 data center. So number 8 is the newer one, just TOP, and it's not fully occupied until the following year in 2025. So in this video, I'm going to share with you what investors need to take note of, right? Especially if you are a unit holder of Keppel DC REIT. There's a preferential offering that's coming up and you would need to make a decision whether you want to subscribe or not. So hopefully this video will give you a better idea what your course of action can be. And this is the deal in terms of the pricing, right? So let me just blow this up so they can see the numbers better. The 2 data centers will be transacted at $1 billion, right, or $1030 million. And you can see there's another line that is $1.38 billion. And the second consideration comes about if they are able to extend the lease from the government by another 10 years. So they will increase from 15.5 years to 25.5 years. Okay, so let's not look at the 1.38 billion at this point in time. Let's just focus on that $1 billion price point. And there were 2 independent valuations done by Knight Frank and Savills. So the Knight Frank valuation was at 1033 million and Savills was at 1054 million. And you can see that the price of 1030 is lower than both the valuation out there. So I would think that this is a fair price to pay, both Keppel shareholders as well as Keppel DC REIT shareholders. So there's nothing much about the price that we need to talk about. And being a REIT, you will always need to raise money when you buy a property, especially we're talking about $1 billion worth of property, and the funding would come in the form of 2 major sources, because there are only 2 ways to seek funding. One is by debt and one is by equity. So there will be these 2 major, but of course it can break down into further nuances, which we will explain here. So the first thing is that there will be equity fundraising that will be split into 2 phases. So the first phase will be a private placement, about $600 million. And the placement units will be priced between $2.074 to $2.128 per share. So the second phase would involve a preferential offering. This is where unit holders can participate. So the first one is only limited to usually institutions and high net worth individuals. Okay, it may not be a unit holder of Keppel DC REIT, but the preferential units will be offered to the Keppel DC REIT unit holders. So there will be a $300 million that will be raised from the unit holders, and it will be priced between 2.03 and 2.08. So that was the initial plan. The exact number actually is out, right, which I will explain in the following slides. And lastly, there's this debt funding of 450.9 million that will be used to fund the lease extension for 10 years. Okay? This is only congruent if the government has approved the extension of lease, and then they will borrow the money, right? There will not be any equity fundraising in the future. So they are using this exercise to do everything all at once. And latest update on the deal is that the private placement is already done. It's typically 1 day, right? Once the announcement is out, the bankers will start to offer this private placement to all the clients, including institution clients, and usually they are stepped up very fast, right? In this case, it is the same, and the private placement was very popular. It's 3.4 times covered. There were more demand than supply in this case, and it's a hot issue. In fact, instead of raising 600 million, it bumped up to the upsized version of $700 million, and at the issue price of 2.09, which is in between, right? Which is in between the initial range that they have given. Okay, and for the preferential offering, the price is already out as well. It's at 2.03, so it's lower than the private placement, and it should be the case because a private placement is only exclusive to a smaller group of people or institutions, but this preferential offering is wider to the unit holders, so they definitely should take care of the unit holders and offer a lower price at 2.03. And the allotment ratio is also announced, 86 new units for every 1,000 units you have. So for example, let's say you have 10,000 units, you will be entitled 860 units. Okay, and it is troublesome because in Singapore exchange, the lot size is 100 shares per lot. And having 860 or even 86 units issued after you pay for these preferential units, right, you will get them. And however, it will be difficult if you want to sell them because they are in odd lot sizes, right? Not impossible to sell, a broker can facilitate, but you may not get the best pricing. And therefore, it's better that you try to get at a full lot size. What you can do in this case is if you get 86 units, maybe you rounding up that you apply for 100 units, you tell them you want 100 units. So if it's a rounding up cases, usually unit holders may get priority compared to others who just apply for more excess preferential units. But in this case, because we saw that the private placement is very hot, and I believe that a lot of unit holders don't mind buying more units in this exercise, there may not be enough excess units to go around. So don't be disappointed if you don't get excess units to round up to your nearest lot size, right? Because it's highly dependent on how popular it is. If you want to be sure, then one way is to round down, right? You will sure get your entitlement. For example, if you have 860 units entitled, maybe you go for 800, right? Then sure, you will get the full lot size in this case. So Keppel DC is in a very good position. In order for them to do this deal and in order for them to do equity fundraising, they must be of a certain position. Okay, and the position is that the share price should be above their book value, and this is the case because the book value is at $1.37 and the share price is above $2. So clear this book value price by a large margin. And why is this important? Because when you want to issue new units or shares, you want to issue at a higher price rather than a lower price, right? If you issue below the book value, you will dilute a lot of the current unit holders. So Keppel DC REIT is in a very good position to do this. And let's look at some of the positive things about this deal, right? There are more positive things than negative things, okay? So the first one is that for the viewers who have been watching my REIT video for all this while, you know that I have a preference for Singapore properties, okay? The reason I gave in the past is that a lot of properties around the world are not as resilient, right? Like you can see in China, property meltdown. You can see even in US, the commercial properties are not doing well, and it is somewhat like a cycle, right? Property market is a cycle, and there are ups and downs, and the properties overseas tend not to weather this down cycle as well as Singapore, right? In Singapore, you don't feel the down cycle that much. And it is true because the land is really scarce and there's not enough space for real estate, and the population is still increasing at the same time. So I do think that there is a lot of resilience in the Singapore property market. So that's why I like this deal, because Keppel DC is buying local data centers, and there are many data centers left for Singapore companies to buy up, and this will bump up their Singapore exposure in the property portfolio from 53.1% to 65.5%. So majority is in Singapore. So that's what I like about this deal. Main thing what I like about this deal. And it's not only that. If you take a look at their presentation slides, they also mentioned that it's yield accretive, right? That means they will, after incorporating these two properties, their dividend per unit will actually go up, which will increase in the future. And it will increase between 8.1% to 11.1%, depending on whether they get a 10-year lease. All right. So the 10-year lease, this is what is probably a more negative side, because JP Morgan also sounded out that with the extension, the DPU actually drops, right? Distribution actually dropped from 11.1% to 8.1%. Okay, that just tells you that the $300 million has paid to the Singapore government to extend the 10-year lease is a tad more expensive, and costs actually relatively more than the current acquisition of the two data centers, okay, in terms of the amount of lease left, right? So that is that one downside, but I think with 8.1% growth in DPU, it is still something that's positive, okay? Not many acquisition can give you such a high single-digit yield accretive situation. And not only that, there are more positive signs coming up in terms of increasing the rental. And currently, the two data centers rental, average rental is 15 to 20% below the market rate. So there is room to increase the rental going forward. And there are also space, or 1.5 floors worth of space that can be converted to house servers and increase the rental for the data center number 8. So there are potential, you see, upside that can be reaped from the rental. So the the distribution per unit may even go higher in the next 2-3 years. So for unit holders, do take note of the timeline, right? So it's expected that the preferential offering will be available for application from 2nd December 9 a.m. And the deadline, which is also very important, please don't react only after the deadline, everything is over. You won't get the preferential units anymore. So the deadline is on 10 December at 5:30 p.m. I would believe that unit holders tend to favor this deal, right? Because there are a lot of benefits that comes with it. It's not a difficult thing to understand, and I don't think there's a lot of convincing that needs to be done. So hopefully Keppel DC REIT can buy more properties in Singapore. Maybe not just them, but other REITs as well, and have a more Singapore-centric ones that could be more resilient in any economic downturn or property downturn in the future. Thanks for watching. Hope you like this video. Give me a thumbs up, subscribe to the channel, and I'll see you in the next one. Goodbye.